All right, good morning, good morning. How's everybody doing today? Funny enough, I still don't have chat in the one window that I'm looking for. Where do I get over here? Who kidnapped me? No kidnapping today. No kidnapping. Go. No kidnapping. Just trying to get things placed. Enjoying my coffee. Yeah. So, anyway, lots and lots and lots and lots of craziness today. Obviously, we knew we had the big data coming in, but unfortunately, the markets kind of did what we expected them to do. Kind of, I mean, it's amazing how many levels actually got nailed at the European Open, right? And did exactly what we thought. And then this morning kind of became a non-existent kind of matter. Overall, the data today, looking at it just as far as inflation goes, core retail sales, exactly as expected. Okay. Core PPI month over month. That's a great number, right? There was a little bit of adjustment last time, showing that it wasn't as bad, and we didn't get the rise that they actually expected, and the PPI number actually fell a little bit, which is awesome, right? Remember, this is the change in the price of finished goods and services sold by producers, so that's awesome. That's great, right? But at the same time, manufacturing, woo, big miss, right? And also retail sales, right? Retail sales bigger than expected, but last time wasn't bad either. And again, core retail sales came in expected. So it's kind of a funny morning. You're like looking at this, you're like, oh my God, look, this is really, really bad for the dollar. The markets are going to be up big today, right? Big. Nope, 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 not so much. Remember yesterday I said that we were not done with all the bank failures? Looks like right down here, 16 minutes ago, First Republic Bank cut the junk by S&P on watch negative. So remember I said that there's going to probably be other, if there's smoke, there's fire. Well, guess what? I'm sure at this point you are well aware of why the markets are moving, and it would be this, right? It would be the Credit Suisse announcement in the overnight, right? And now Credit Suisse tanked 30%. Dow is down 500 points. Holy crap. Well, guess what? Hate to inform you, this has absolutely zero to do with anything, right? Now, this First Republic, that has to do with everything. That we were talking with the other bank failures. Credit Suisse, nothing. This actually has to do with things that right here, right? Credit Suisse saw customer withdrawals of more than 110 billion Swiss francs in the fourth quarter as a string of scandals, legacy risk, and compliance fails continue to plague it. So it's not actually a run on the bank. Actually, it's really this one, another one. Basically, it had, this is in an annual report. So all the data with Credit Suisse came from an annual report, talking about some, it's related to different controls in there. This has nothing to do with what the current, inflation and bank system is going through right now. It just happened to be the timing of it. But people hear, oh my God, Credit Suisse is failing. And immediately it's 500 points down. But it has nothing to do. It did not have a run on the bank. I mean, obviously people are doing it now because they think that's what it is. But they said that we may not even need government intervention, right? He wouldn't comment on it. He's like, we don't know if we'll need any sort of assistance in the future. Credit Suisse is pretty big. But again, apples to oranges. But everybody's like, oh yeah. Now this first Republic Bank, this is in that same arena. I know. So that could be bank number 3 that, kind of fails as there's a run on that one as well. So, but because of it, we're seeing some major movement. You're seeing the euro dollar. You're like, wait a second. This is horrible for the dollar. Why the heck is the dollar going up here? Right? Why is this up? Why is this up? Why is this down? Right? The pound, monsters move too, especially versus the yen. But it's funny because you got pound strength here, and then pound getting obliterated. Well, this is the yen. This is the yen here. The Aussie yen, the euro yen, the dollar yen, the pound yen, all the same. And funny enough, they went off all the zones that we mentioned yesterday. It's funny how that works, right? I didn't know the Credit Suisse was going to have problems today, right? I didn't have any idea. But yet it bounced off all those technical levels that we talked about. So kind of a fun morning. But yeah, you're looking at this, you're like, how the heck is their dollar strength coming in? Now, again, the Swiss one makes sense. It's one of the big banks. Melissa's like locked herself in the room. She's like, I'm going to get 8 million calls today. She doesn't work for Credit Suisse. She works for the other big Swiss bank. So she's like, well, what do I tell people? I was like, I don't know, wait for the regulatory notice, but it's not the same thing, so who knows? But yeah, I'm sure she's going to get 1 billion calls this morning. So she has barricaded herself in the room. Kipster's running around with Asher downstairs. So we will see. Anyway, again, is this day going to make much sense today? Nah, but it probably makes things worse. Seeing retail sales being greater than expected to the downside, not really what you want to see, right? So not the best. And then this manufacturing, and again, Empire tends to go a little crazy, but yeah. But the PPI data is great, right? I think that's awesome. It's good news. Later on today, we're gonna have New Zealand GDP expected to be negative. Expected to be negative, right? And again, we'll see. That could be a nice little turnaround, particularly if the dollar goes in one direction today. That could be a nice little reversal. And then tonight, Aussie data. So Aussie is down right now, but not massive amounts. But if you look at this, unemployment's supposed to go down. Employment change supposed to be big. This could be a really, really positive number today. With this going down, we can kind of see. Where this one is. Going to move itself before news. But I think there could be some nice reversal opportunity, particularly late at night tonight. But again, I think this First Republic Bank will be the next big thing. But in pound news, you may say, well, why do we get any pound strength in here? Well, this came out a little while ago, right? The UK will not enter recession this year, right? Right? We will bring prepayment meter energy charges in line with standard charges, right? And again, it's all about fuel, but that's not bad, right? We're meeting our fiscal rule for debt falling. So again, pretty good data out of the UK. Hey, listen, we're not going to enter recession this year. Based on everything, we're not going to do it. Oops, I don't know what the heck I just knocked over, but I don't know what that noise was. Oh, I know what it was. So that great data for the UK, and again, that's why we're seeing this euro pound down about 79, as well as again, not that the Swiss is really a big driver in the EU, but obviously people are like, oh, European problems. Oh, more banks going. You say it there, but again, 159 outside of the range. Again, right around the ATR, 300, a little bit more than expected. All right, so we know what we have tonight. Tomorrow morning, we're coming in with our unemployment claims, as well as we have our EU monetary policy and refinancing. Now, the big question is, and again, the expectation is this. Remember, the talk right now in the U.S. is basically, well, the Fed's not going to raise, right? Right? The Fed's not going to raise because all the bad things, the banks, oh my God, they'll crash all these banks, right? It could be bad, right? You're talking about the U.S. not doing it, but yet the European Union's like, nah, we're doing 0.5. So the question is, now with something like Credit Suisse coming in a day before, does the EU taper this down a little bit, or do they maybe hold at 3, right? Just to kind of make sure that this is, again, remember, everyone's like, oh, that's the Fed causing this banking crisis. Well, I mean, they're raising, the EU, they have banks too, guys. They're raising at 0.5, and we're dealing with a 0.25. So is the EU responsible at all, or is it not really the Fed's problem? So will they pull back on this one? And if they do, if the expectation is 350, right? What does this look like tomorrow, right? Does this get hammered over here? Is this going to be adjusted? So, yeah, it adds an interesting little spice into the mix in the next 24 hours, as well as the ECB press conference. And again, maybe they hold and then they got to explain it, but I don't know. I feel like at this point it's too late to change that, but you never know. And with this being down 160 today, is that going to be a big pop to the top side? Is euro pound going to be up big green tomorrow? Or is it going to be another big red day down? Or is this already adjusting for the EU to hold back, right? Show some restraint. So a lot in the next 24 hours. Jumping across to the charts. Here's the VIX. We went all the way up. We're up 19. Then we were up down like 12 yesterday. And guess what? Now we're up 17% again. And really, I mean, they're down, but I wouldn't say that they are down to levels where, we should be like in panic mode. It's not like, oh my God. Right? I mean, they're down today less than what they were up yesterday. Right? Now, off the Credit Suisse thing, is there fear out there? Sure. That could absolutely lead it down to the downside. Should we be celebrating today's data? I mean, I guess if you want them not to raise interest rates, then I guess it's good. But seeing retail sales starting to pick up and manufacturing going down, it's kind of like, oh, that means earnings are going to be bad. So it's kind of future looking. It's like, is it going to be the interest rate thing or what? I mean, I don't know. Maybe people think that, this will be good. But even if the Fed holds and this is already trending down, is it a good spot? Maybe not. The dollar taking off, baby. And you're like, wait a second, all that data was horrible. What the heck is going on? Well, right there. right? Credit Suisse news came out and boom, all the way back up again, right? Massively strong dollar-based day today, right? Massive movement, 1.1. We went from, what were we down here? 103.50 all the way up to almost 105. We were at 104.96. So massive movement in the European session. So would I expect some pullback? Probably, right? Probably, right? I mean, the data, it's all red for raising the dollar. I still don't think that all the other data besides PPI was strong. And again, people are celebrating, again, that selective, those beer goggles for the stock market, right? Oh my God, the year-over-year is down to 6. It's working. Yeah, 3 times higher. Celebrate. But yet you're seeing, the core continue to raise month over month over month. The Fed looks at that, and I gotta, again, core PCE is the big one that they're looking for. So again, we still haven't had the big one, but right now everything's saying like, yeah, you need to keep going. And remember, we're already at 0.5. So I mean, I think, if we tackle on 0.5 I don't know. We'll see. Anyway, dollar is up big. Indices all in the red. And again, I think if people really start to kind of look at this and dial into it, be like, oh, this is because of things of last year. It's not because of people making a run on the bank. Now is this a banking institution thing? Yeah, this is, but the Credit Suisse is not. But the Credit Suisse is just such a big number, or it's just such a big name, right? Yeah, so that's gonna probably, we'll see. But I would expect a reversal back down again. Oil, look at this, baby. Look at this, 68.80. Again, part of this too, and I'll tell you right now, like oil, natural gas, they obviously both accelerated in the overnight, right? Around that 3 o'clock time frame. Basically, it's like, holy crap, banks are failing again. This is bad. This is recession. This is lowering demand. And that's why we're seeing both of them to the downside. I mean, again, breaking through 70 is awesome, right? That is great. Again, so far the Fed has had a much more beneficial effect right now than any of the policies that Biden has created, right? Biden's policies have all driven it up. He's like, no, we got to make gas cheaper, right? So far it's been the Fed, right? And the Fed's like, I don't care about climate change. It's not our responsibility, right? And it's going straight down. So yeah, that's good. I'm happy with it under 70. I'd like to see where the gas prices actually go to, right? I know yesterday the local station was 318. I was like, man, it was 295 like a week ago. Natural gas also down. We're still hovering around 250. You're seeing gold. You're like, wait a second. The dollar's up. How the heck is gold up? Well, flight to safety, right? Flight to safety. The data was horrible. And again, they are preparing for this one. But you may say, wait a second, why is gold going up? Well, because whenever there's like a banking system failure or something like that, again, gold is one of those assets where people will run to try to hold value, right? It's not really a hedge for inflation, right? I guess hedge for inflation is wrong. Like, it's not like you're going to make money off of it. All it does is preserve it preserves your buying power. That's all it is. So again, when you start talking about banking system problems, you tend to see this, but it's very, very rare. I'll tell you right now, it's very rare that you see a dollar go straight up like this and you see gold go straight up like this. Okay. Very rare. Now, yesterday, and again, we'll cover this in the gold section, but you can see too many hits and ended up slicing through and ended up grabbing that top level. Silver, again, silver had the same thing. It's like 1, 2, 3, 4. Oh God, we're at 5. And it came back and you can see it grabbed that 22.20 real early and then came back down to the 22. But it's for the same reason, right? It should be double what gold is, and gold's up 1.7. 1.07, silver's up 2.28, right? So it's doing exactly what it should do. Again, banking system failure, crypto. You may say, well, wait a second. If the bank's failing, we're going to crypto, right? Did crypto have the same move? No, it did not. So a lot of those, and again, look at Ethereum. Ethereum's actually down. So important to note, I mean, this is how you look at kind of the overall markets, right? You're seeing the dollar up big. Stock market's down. But gold up big. And wait a second, those bad stock markets, those evil banks, send your money to crypto. Crypto's not doing anything. Little pop yesterday morning, and it ran back down again, and it's done absolutely nothing. Makes you think, huh? Right? Banking system's bad. This should be up here, right? Dollar's bad, gold bad, everything bad. 5 crypto. Whoops, never mind. Not doing nothing. And again, Ethereum down actually right now. So think about that. And then bonds. Why are bonds up? It's like, wait a second. How does this happen? How do we have the dollar up? How do we have gold up and have bonds up all at the same time. People are like, what the heck is going on today? Oh my God, how is everything up? Well, if you think about the flight to safety, dollar, flight to safety, gold, flight to safety, bonds, flight to safety, stock market, risk, bad. So yeah. So it's a fun day in the markets. And again, the bonds are actually sitting up in an area where we have had sellers coming in. So it's just taking a top-down approach, right? Taking a top-down approach. Today is the day that everyone's like, I got this. This works out. I know how to do it. Today is the day that a lot of these people that really just don't have any idea what the hell they're talking about. And again, excuse my French. I know it's not a child-friendly program, right? Today's those days where a lot of people are going to get stopped out because they're like, oh, this is what it does. It's supposed to do this. Market's not supposed to do anything, right? And when you see the coupling of different things becoming uncoupling, right? Tells you a lot about the actual markets. When you look behind the scenes and you understand why is the dollar up, why is gold up, why are bonds up, right? It goes back to where the heck real money is, the big money, the money that we're trying to follow and emulate. Okay. Sorry, someone just messaged me. I haven't been online for a while. And they're like, "Hey, did you die?" I'm like, "Yeah, pretty much, pretty close, pretty close." Um, All right. So that's where we're at in overview. So let's start diving into some of these currencies. Now, yesterday morning, we were sitting right in this area, and we talked about a level here, and we kind of hit that level at 2 o'clock, pulled back. Hit it again. It's like, whoa, there's 3 hits. This one is done. There's no hold. And it did push back down again. But if you were still short this one at 66.86, it's like, listen, how many more telltale signs you need to see? It hit and went lower. It hit again and went lower. And you're finding the base, the buyers here, get the heck out. Right? There's no reason to be in this trade anymore, which you shouldn't have. But we mentioned that we had another level up top, and guess what hit? Right? 11 o'clock last night, this one hit. It's a level we've already hit before. So, I mean, I can drag this one across. Right? Right there. Right? So, again, all it did was complete the top section. So, no major changes. Everybody should have been fine with this one. This one was pretty easy. Again, we talked about this being this level right above the 6318. We talked about the extra buying pressure in that one. So, I mean, again, that was out. We talked about a profit target yesterday when we were sitting back in here. We're like, hey, listen, this is going to reverse somewhere. We were talking about potentially this level, but after 2 hits, you're like, nope, get out. Not interested anymore. As soon as it got positive, you're like, nope, out. The target was still live for us. We were looking for 66.40, and guess what? It ran off of this morning right there, and it didn't even break through the bottom side. So we said that we weren't really interested here. We were waiting for a 66.22 as being kind of the entry area, but this would have been our target at 66.40, and that's what it did. It hit it and hit it and hit it. It's smashing through, and it kind of bounced a little bit, right? But target is actually, target has now been hit. So we're still in the kind of the same pattern. I would like to see what this does today if the dollar can, slow down a little bit. And again, the Aussie data tonight is supposed to be pretty good. So could that lead for a reversal with profit taking later on tonight? Sure, absolutely. And you say, what do you mean that tonight? Well, you have 8:30 tonight, right? So at what, 20:30? All right, let's move this over here. Let's go to 20:30. Right there. That's where we have news. So could this come down? Could this grind through with a little bit more? Could we take off from there? Sure, absolutely. And that would make a lot of sense. But right now, again, we're banging off the profit target we talked about yesterday. Really no trend. It's a sideways movement. Everybody's trying to look at this and figure out what the heck is going on. But there was your trade in the overnight. Again, you should have gotten yourself out of this trade after it hit twice and went back to this base. And again, you were up over 1-1. So it should have been worst case scenario. Stop at break even, but you should have banked a few on it. You had plenty of opportunities, and none of them got stopped out until the burst through, right? And then it just went up to the higher level that we talked about yesterday, being, sitting right here, the strong movement off. And bam, there you go. Now, also again, well, this sucker tanked, right? Yesterday, we were looking for levels, and we mentioned, hey, listen, there's 2 levels, big box, depending on how aggressive you want to be, but 90.51. Well, I'll bring it across. There's your 90.51 and again, what time did it hit the zone? 3 a.m., right? 3 a.m. And we use 3 a.m. as the kind of the start of the European session. So, again, had you been here yesterday, there's your European session trade, and your 1 to 3 was sitting right about there. It's about 50 pips, right? 50 pips profit. We said, hey, listen, get out of this level down here, right? That was at 91 pips. Well, what did it do? It went all the way back down to the far opposing zone, and it may have broken out maybe by half a pip. it ran this thing all the way down to about a 1 to 13 base trade. Okay. We were calling for the reversal, but again, we typically want trades 1 to 3, but there was the profit target that we drew yesterday. There you go. What did we say yesterday? Look for a reversal in the yen pairs. They got absolutely slammed yesterday in every single pair. Also, yen, euro, yen, pound, yen, dollar, yen. Look for that reversal. There was your level. And again, we were looking at it over here. We were sitting here yesterday like, oh, don't reverse here. It did. It reversed right there. And we missed it by just a little bit. And then what did it do? It rallied up, rallied up, rallied up, rallied up, rallied up for the European session. And magically, they all turned right on the European session. And boom. So again, right now, what do you do with this one? Right now, I think you got to it's got to stabilize itself. It's chopping back and forth, trying to figure out, oh my God, what the heck's going on? Bank bail, what's going on? Yeah, it's funny. Melissa, in the article she was reading, it says that Credit Suisse is actually too big to save, right? In the United States, we've heard that too big to fail thing. Credit Suisse, supposedly, in the article she read, was Credit Suisse was too big to save. It's like, that's going to throw a monkey wrench into things. But anyway, right now, guys, we've gone in the opposite end of the direction. Again, is it outside of a daily ATR? The daily ATR is 105. It's moved 162. So it's about 1.5 times. I would say it's probably due for reversal, but the overall stock market's going to have to stabilize itself based off of all the news that we've heard today. And again, obviously that what is it called? First Credit? What is it? Who is it? First Republic. Oh, here we go. PIMCO, what are they saying? It's for boiling a frog. There we go. Slowly turning up the heat until it's too late. And the overnight beta by 50 basis points and could coincide with and this coincided with a run on silicone. Yeah. Yep. And remember, SVB was tech startups. The other two were both crypto. Just FYI. So we'll see what happens with the next one. So, yeah, I would say, are we at an area where there's some reversals coming in? Probably, although I think it's a very volatile space right now. I'd like to see this get a good stabilization down here. As you can see, small wick down, small wick up. People are like, oh my God, what the heck are we doing? Now, I will point out, I do like this level right here, okay? Let's see, does this coincide right now? It does not, so we kind of need to push down a little bit more. I do like this formation, and this is one of my favorite kind of candle setups, guys. And you guys know this before. I love when there's a big drop in price, a little bit of a base, and a big push down. Those 3 ascending candles right now, I love it. I love it. It's kind of a small area. Let's see what we've got here. Yeah, 20 pips on this one. I like that one. So if we're able to kind of rally up to that level, I think that's a decent spot to get into. And again, you can do it off the green candle. You can do it off the red candle, either one. I'll just keep it a little bit more conservative. But I love those things where you have those 3 kind of like that sawtooth effect there with a big push, a little fight, and then, we tried, and then boom, it collapsed again. Love those. Love those. So, yeah, I think we need stabilization. Again, we know we have news coming in. Balance of trade is not as big of a deal as what we have with the Aussie news tonight. So, again, I'd like to see this stabilize. Maybe if we get a push up in the next, I don't know, wait till about noon. We'll see, a couple hours, between 4 o'clock and the 8:30 tonight. Look to see those drives. It may give us kind of a hidden zone that we don't have right now. But right now, the only thing that I'm really kind of excited about on this one would be when we come back up to that level at 88.71, right? But again, kind of hard. There's the level from yesterday. We hit, we're done. And again, this was 91 pips. So quite a large move. Euro dollar. Again, we were calling for a reversal. We said, I don't know where it's coming in, right? We hit it. This is the 831 we hit. We hit it again. It's like, hey, be careful. It's got to put a new top in. And it did. And the European session, we had mentioned, hey, listen, there's a great little Harry Potter trade in here. Wait for it to come through. And if you look at this one, there's what it looked like on a 15. So I'd love to say, hey, listen, you absolutely got into this one. We called it. It just happened to be, right here. I mean, European session drove it down, and then at 5:30 reversal time frame. Would you have drawn that one? Is that enough of a drop and a base and a pullback? Maybe. I mean, it based here, it pulled down, then it opened here, and then kind of pulled back. On the 5, it looks much, much better. But again, look, boom, boom. It's like, oh, there it is. There's the base. And then it did pull back. So you may or may not have gotten into it. What did it do? It went all the way down, basically to the start of where we drew this, right? We said, hey, listen, there's a lot of room to run on this one. There's the complete opposite end of the spectrum. So where we're hitting right now, again, is this a normal base move? I mean, from the top, you're talking about 229 pips. It has a daily ATR of 95. So we were 2 times over what an average day looks like. Typically, that is grounds for a reversal. Okay. Now, the situation that caused this, is the situation over? Again, the Credit Suisse thing, not necessarily the same thing that's going on with other banks, but now that they've mentioned a third, again, I said yesterday, if there's smoke, there's fire. I highly doubt it'll just be those three. This is now number 4. This would be number 4 if it starts to collapse. Here you go. Let's see. Hold on. Let's see more. ECB officials contacted lenders to ask about Credit Suisse exposure. So yeah. So the question is, see, this is very, with this happening now. Look, this is just coming out, right? It's getting good. It's a popcorn moment. Is this going to change? Right? Because again, remember the Fed. Hey, those evil Fed guys, they should be slowing this down. Man, damn that 0.5. That's why this is all happening. Well, can the ECB really do it? Can they really jack these rates right now? Can they do a 0.5? Right? Is that going to change because of things like, Credit Suisse? So I don't know. Right now, again, we're looking for this price to come all the way down to 105, and that's really where we're looking for buys on this one. But we talked yesterday about, hey, listen, we're at 107. We'd really like to get down to 105. I mean, cutting from 107 to, what down to the low is 105.22. Quite a big move. I mean, we said, can it happen? Sure, right? Did I know there's going to be bank failures? No. But again, look at that. Nice slice through. Again, you may or may not have gotten in. Looking at the way that this one sliced all the way down and pulled back. Again, I don't know if everybody's able to get into that one. But again, looking for a break, looking for a push. And, poor fib traders. Did it slow down? And again, I'll raise this up just so you can say, hey, it's high to low. I see it. If you try to get into 23.6, what happened? You got stopped out. You try to get it to 50. And again, the 50, I'll give it credit, though. There was basing down here at the 50. Was it able to get in? Nope. Just blew right through. 61.8, nothing. 78, a little bit of a hiccup. And again, it was a little bit low, but that was a crap zone. So really the only surprise in this one was really kind of down here at the 50, which again is not typically, it's kind of like your hidden zone. Not as many people look at that one. But 23 didn't even slow it down. Okay. So again, understand that a lot of these zones, it's like, I'm going to do this. And again, if you took a 51 using the 61.8 as a backstop, guess what? Out, right? Out. We were calling for a short here. And again, very, very dangerous. So again, wait for stabilization. I like 105 as being the target. And I like to see more of a bounce off that 105, particularly for what we have coming tomorrow with, again, not building permits, but the other stuff that we have all over here. Okay. Particularly the interest rate. Euro pound. All right. So euro pound. Again, took off at that 5:30 time frame. Didn't do much. Yesterday, again, we got this kind of pop back. This is where we were sitting yesterday. It ground up a little bit. Not wonderful. We were really kind of hoping it got all the way up to here before today. Unfortunately, it didn't do it. You can see it kind of stumbled, and it sliced through the 87. It was big. It wasn't enough to hold it, right? We were hoping that was going to be the area. We're looking for a reversal from there, but not so much. I mean, this one just got sliced through from 5 o'clock down. 121 pips. Right? Or, sorry, 116. So over double. It has a daily ATR of 55. So, yeah, I mean, we were calling for down. This far down, not as much, right? What are they saying? What's this? Oh, yeah, there it is. Yep. We have seen a solid 50 basis point rate hike has been cut to 35 basic. Here we go. So, look, here, it's happening. So the market is starting to adjust for it. They're starting to say, hey, listen, we don't see 50, we see 3.5. Right? So if the market prepares for 3.5 and they come in at 2.5, there's more to come. There's more to come. So look, they're starting to do it too. So it's interesting that they're now mentioning those things. How do I go back? There we go. All right. So it's funny. They mention that, and what does it do? It goes up again. I love the markets. I love the market. So let's see. Right now, is this what it ran off of? Did it bounce off this? No. Okay, thank God. I was like, that is not. Oh, it's close, but not a great level. So this is what we're dealing with. We don't really have a lot of great levels here, and this is something we've been mentioning, and that's why Boone uses it more of kind of an indicator versus an actual trade setup. But we do have something down here. There we go. Turn it live again. So now we have the possibility of breaking through this 86. And again, we still got a racetrack trade. So we're up here. I mean, we do have what? 39 pips. Yeah. So actually from where the trigger is, it was only about 30 pips away. So I would say potentially this is something coming to life for tomorrow, particularly with that 0.5 versus 0.35. Yeah. I mean, let's see. Is that actually a... Yeah, it's coming in. This is what we got going on. Look, it's kind of like a Harry Potter trade based off that broken level and a 23. So, yeah, I like this one more bearish. I really do think the ECB is probably going to change, so they're not kind of adding to the problem since the Fed's getting blamed for raising so much. I think this continues to deteriorate, and I really want this to come down, and I want it to start basing. I think if we can get a base in here, particularly with that news tomorrow, again, I think there's a short trade looking to kind of, again, break through this level. So, yeah, I'd still maintain short on this one. Weak euro. Now, euro yen. So there's our trade from yesterday. This one's funny. So yesterday we hit, and we're like, listen, we're just basing, right? If you were looking to take that short from that level, we said it wasn't bad. And again, it didn't get stopped out in that time frame. You can see they came back and hit it and came back and hit it again. It started the base. It's like, yeah, you're out. You're not taking this trade, right? This is one of those. I mean, it did nothing from 11 or from what? 11 it entered that zone. It did nothing until 7 p.m. at night. Absolutely every reason to get out of that trade. You should not be taking it. Now, we talked about a level above, and we said, hey, listen, this is more for news. If we could get up there for news, and again, the news was here. I said, if we can get there before then, you could take it. It's a tested level. It did at the European Open today. But I hate to inform everybody that this one missed by 4.6 pips. So the spread on this one is about, it fluctuates around 2 to 2.5. It's 1.7 right now, but we'll fluctuate back and forth. We missed it. It happens. Not much we can say. Again, here's that old trade from yesterday. So let's just take all this off. Clear it. Since it is way past. You're out. Let's see what we got here. I don't need any of these things now. Pull this. I may actually keep that one on. Yeah, I'm going to keep that one on. I'm going to keep that one on for somewhat of a Harry. It's way out of the Harry Potter range, but the fact that this was an old area, I'm actually going to adjust it just a little bit, though. We're going to adjust it to there. And again, all that's doing is taking old as new. I'd like to see it come up in base. It's going to be there. It's going to be one of the two on the top side. I think it gets front run on the 50, though. So, kind of my same thinking here. Obviously, this is massive yen strength coming into the market. Again, obviously, there's European weakness out there as well. I think both of them roll, but I do think there's a little bit more contagion. I think the risk level in this euro yen trade right now is a bit higher than normal. We do know we had the interest rate change coming in, and again, the news here. Again, we're going to do, instead of 0.5, we're doing 0.35, and now it's rallying back up again, right? So people are liking that one. I would say right now, I wouldn't be surprised if we do get up into this 23.6 level, right? It's right around. It's right at 141. Right there. You can see it comes in right at 141. Being a round number with a bunch of zeros and a 23.6, and this isn't easy again for amateur traders. And again, maybe they may not use it from that level. You know, they're probably going to do it from this. This is the wrong place to do it from, but I bet you they do it from there. It's close. It's a little bit off now. I would not be surprised. Let's see, where's it at? It's going to be at 80. I wouldn't be surprised if it goes a little bit higher, but yeah, I won't be surprised at all if people are taking these shorts off of one. Again, this is too easy of a trade when they see this. They're like, oh my God, Fibs, I'm supposed to draw the high to low, right? Where's that? There's a pullback right there. Oh my God, it's so good. But remember, this is pretty much a parabolic move. I mean, if I take this up to on a 1 hour, it's pretty much a parabolic move. We're expecting a retracement to come in. So is it dangerous there? Yeah, especially with news sitting right over there. So just be cautious with this one. I think this one has the most risk of any pair right now because of, again, obviously the yen, but also because if they start changing interest rates and come out publicly and say it. Yeah, this is the scenario we did not want. Inflation is still too high, but you know what? We can't raise it because the market's already collapsing, right? So inflation continuing to rise. Can't raise inflation to battle it, and the banking system can't handle it. So yeah, it's kind of the perfect storm. Pound yen. All right, so there's our targets from yesterday. Now, this is another one of those ones. So yesterday we said, hey, listen, you can get through 121.36. Pull the trigger. Unfortunately, we like to have a pullback, and yeah, I mean, hit it, based above. It's like, oh, it's going through. It's going through. And again, this one did not actually, this green candle here did not break through. This is the hard one because when you see all this basing in here, like, oh God, just pull the trigger when it breaks, right? You want to pull it. The rules typically say we need a drop, right? We need a drop, a base, and a pullback to a level. How many times do you need to do it? So this is one of those ones that it's like, oh God, it's 17 pips risk, 50 something in the other direction. Can we get it live? It's hard. Profit target 1, a little bit of a hiccup slice through, came down, and all what it did do, had all kinds of major problems at profit target number 2, and then kind of rallied back up, and we're still there. So yeah. I don't know what to say. Yeah, so maybe you missed this one. At some point, after enough consecutive hits, and depending on how it bases above, sometimes you do, for Harry Potters, have to pull that trigger, right? You do have to pull that trigger sometimes. This would have been one of those times that you wanted to do it. So where we are with this right now, it's just like the other ones. I do think we have a bit of a dollar retracement in there. I do think some dollar weakness will come in. Again, it's not, Credit Suisse, they had their own problems. It wasn't the Fed that was causing their major problems over there. But people will associate it with that. And again, they're going to feel pressure. And I'll tell you right now, look, home buyer demand is rising, but they're concerned about banking. Inflation. Oh, yeah. So here you go. Mortgage rates are high and volatile. Our homes are still priced. Inflation is not in check, right? Not in check. Right, this is odd news, but I don't believe it. They're starting to feel better about their business, right? So, I mean, there's the home builders. Inflation's still not controlled, but we're worried about, banks. I think this is a big deal if we hear more about this today. So, should the dollar raise up? Probably. I could see this come back again. Again, the pound data should be out at this point. I don't think we're going to get any more pound data. And again, this is, I think, purely that dollar strength. I do think it weakens, but I don't think there's enough pound data. It's kind of like no news is good news. I do think it retraces back up again. I don't think we make it down to a 50. I mean, it's possible, I guess. It's possible the Fed says, hey, Credit Suisse has nothing to do with us. It was their irregularities in their accounting. So that has nothing to do with the Fed. We're doing what we're doing. Again, that could be some dollar strength still rolling in. So I think it has the power to go down, but I'm really looking for a reversal. I'd like for it to come back in, and I think, again, I don't think building permits is going to be a big mover. Maybe sentiment on Friday. Ugh. Let me see, hold on. Yeah, see, the pound has no data for the rest of the week, right? I really feel like no news is going to be good news. So yeah, I'd really like to see this come up high. Now we are in the top third, so I know it's like, Brian, this is in the top third of the curve. You should be telling me to short. Yeah, absolutely, I got it. But again, all this dollar strength right now, we only have dollar news that could be bad. The pound doesn't really have any more bad news to come in for the rest of the week. I feel like this has the power to go higher. And the last news we heard was, hey, listen, we're not going into recession this year. We are on track. We're all good. So pound's sitting in a positive light right now. And again, this is the dollar. Again, the flight to safety. If that safety is, people are starting to like, okay, we got to get a little, okay, let's sell some of the dollar position we got. This should rally back up again. But right now, it's hard because, again, we talked about the 2 targets yesterday, and we're literally sitting at the second target. So it's hard for me to do much with this one right now. Pound yen. Funny. Yesterday morning, we're like, oh, God, it's not going to be the top. Just go a little bit farther. And it was. It kind of pulled down and went right back up again. It's basically the same trade. 23, I'd say it's more of a Harry Potter trade, right? So we were sitting here yesterday forming a base. If you look at this, how much time did it spend basing there? Right? 1, 2, 3. 4 should break, but it didn't slow. And what did it do? Did it slow at the 23? Nope. Slow at the 50? Nope. Slow at the 61? Nope. Kind of hit in the middle and then chopped around and just collapsed all the way back to it. And what did it do? All the way to the start of the same move. So I told you 160 was going to be a big deal. And we were like, can we get over to 160 right here? Did not expect this one, so I mean, I don't want to claim full credit for this. This is a monstrous move from top to bottom, 433 pips. And again, that's why this pair is called the Widowmaker, right? We knew 160 was going to be a big deal, guys. I told you 160 was a big deal. It's a very large psychological number. And look, it was able to not only stem the fall, but provide some reversal, kind of going back up and down from it. So, yeah, we're there right now. I'd say the same thing. I think a lot of the yen movement is in. I think if people realize that, the Chicken Little sky is not falling, I do think we have some profit taking and reversal back again on this one. And again, I think the pound's in a great place. I think right now all the exposure inside of the pound yen is coming from the yen. Can it get much worse? I mean, I guess if another one or two banks pops up today, it's like, oh, we could collapse too. Then yeah, absolutely. It could get worse. But understand this 160 number, there's more going on with this one at an institutional bank level, than just, small banks, right? There's definitely a lot more going on. It's kind of like 130 with the dollar, right? With the dollar yen. 160 is a very, very big, large psychological number for this one. So again, expect a little bit of a retrace back. Now, I will say in this one, again, we could take this off and just basically draw it the other direction because it came all the way through. I will say there is a little zone here, right? I do love these candles we just talked about a little while ago, right? Ascending, big drop, a little bit of a fight, a little fight, and then boom, and it did get front run. So I will say that there is a level here that I could be tempted to get short in. If we could rally back up to the 161.26, I think there could be a little short opportunity in there just because I love those candles. Right? I love the way that formation is. Those are some of my favorite. So could absolutely see this one again turning and rolling back to the downside. Okay. Where the heck is the chat overlay? What? No. Okay. All right. Are we going to do anything without this one? Yeah, I like the 161. Again, profit taking come in. Maybe some more bad news, but I like it overall. So dollar, right? Here's the dollar. We marked this one off yesterday. Again, it did nothing yesterday. It just stabilized and maintained. We were looking for we were hoping we could get it down. It did nothing, right? I mean, here's where we were standing yesterday, and then here's where we were until the European market took off. And what did it do? Dollar strength just to the floor, right back up. But now we're having some problems up here. And this is a level we pointed out, right? We had marked this level off and said, hey, listen, if we can run all the way back down to that level, wouldn't love it. Right now, it's more like this. It's at a 61.8 because it didn't push all the way down like we wanted. So right now, that was the low yesterday at 10:30, and it did rally back up. But now we're at a 61.8 sitting here. Let's see, how big is this zone? It's 20, so it's a little bit big. But what you could potentially do in this one is you could look to take a short position right now. You could look on a 5-minute time frame and, hey, listen, I like this one, but as you said, there's a lot of volatility, a lot of craziness going on right now. Wait for a confirmation on this one, right? Look for something on the smaller time frames. Get that red, green, red confirmation in there. The close of the third candle, pull the trigger. 22 is a little bit high for me, 60 in the other direction. But if you look at this one, there's a little bit of drama down here at 137.42, but it should be able to run all the way down. I would say right now, this level here, which it's funny, it just happens to be 23, but that doesn't necessarily matter anymore. You can see the 23 paused and just was like, nope, not interested in 23. 23 is only 24 hours of, anybody, any of the fib gurus, if they've been getting in the 23 sixes, then in the last, 24 hours, they've had quite a few stop outs. I'd say it's due for reversal. Watch out this level right here. I think you're going to have selling or, buyers coming in at that level right there at the 137.02. So just cautious. Okay. Dollar Swiss. All right. So dollar Swiss, it was the bottom yesterday. And you can see we talked about a little bit of a confirmation level. And this is where we sit yesterday. And it did pull back and then started to form a base and came back up again and went down again. This is one of those ones you probably got to stop. I mean, look at this. We talked about it being confirmed, not super fresh, front run twice. All this basing maintained and held. It pushed back down. The market ended. It kind of went back up and then kind of went back down again. If you didn't have your stop loss or break even here, this is all on you, right? This is over a 1-to-1. It's already bounced off of it again. It's like, listen, we've spent 1, 2, 3, and then all of a sudden it started basing 4. Get the heck out. Now, it did come up and grab the 50. There was a level just above it, but wasn't as interested in there. Now, is this a geopolitical pair at this point, being the Swiss? Credit Suisse is not a government bank, but they may step in. And again, it does have some contagion right now. You'll notice this is not as violent a swing as the yen. And again, it's because it's not directly linked. But remember, one of the things I said yesterday is I'm very concerned about the dollar Swiss pair because it is the only pair currently out there right now that we've had in recent memory that has had any type of liquidity crisis associated with it. And again, spreads started to get wide. And again, remember, people got stuck in this one, right? Um, it did go back up and turn on the 50. So if you wanted that one, you could have grabbed that on kind of a test, right? You said, well, there's the top. If it comes back, yeah. And it did. It came back and grabbed it, pulled back down, fair to go lower. It is pushing back down again. And I'm actually okay with this one. Like if you were in this position, and again, I just think there's a lot of people looking at this one for all the wrong reasons. I would say I'm actually okay with the short. I think this short is fine. You are currently at a 1 to 7.8. I think if you get to that level right there, you move your stop loss to break even and let it run. The 1 to 3 is a little tiny bit deep for me. I'm looking at this and saying, hey, listen, I think there's going to be some buyers coming in at this level. But the dollar had so much push in the overnight, you're going to see profit taking coming in from it. And I think that's what you're starting to see here, particularly at that 9:30, 10 o'clock window. If we can make it through this last little bit of buyers, I think this runs all the way back down to 91.58. All right. So I know this is kind of like the like, oh my God, you're in the Swiss? Why would you do that right now? I mean, the Bank of Switzerland is not Credit Suisse. There is a difference there. And again, this did not have the monstrous move that the dollar did and everything else. Now, monstrous move here. So, what I tell you guys yesterday, 135, kind of a big deal. We were sitting right here. I was like, oh, if we can get up to that 135. And right here, I said, hey, listen, you didn't get in. I'd love for it to pull back up. It got so close, but it didn't make it. It missed it by like 2 pips, 3 pips. Well, guess what happened? In the overnight, we ran up. European session started right here, right? 3 o'clock, went right back up, and 5 o'clock is where this one left. And looks just like all the other yen pairs. But where did it stop? At a confirmed gap. And I said, I love this one. Why did I love this one? There was a gap. There was a confirmation. If you go to the high to low, it just happened to be also at the 135 mark. So huge psychological level, 50% retracement level, a confirmed gap level. They don't get any better than this. Now, did I predict it to run all the way back to the bottom? No. But this is 275 pips to the downside. Monstrous move. And again, wasn't concerned about this. There was a Harry Potter in there. I was looking for profit taking somewhere around this old level. And again, you can see it bounced off of it. So trade's done. Not much I can do with it. It did reverse all the way back to the downside. Here's the opposite end where you should have been looking. That's what it hit. And we're bouncing off of. So overall, it makes sense where it is. Yesterday, we said we can get close to that 132 range. It made it down to 132.22, right? We talked about a big spike down yesterday. Well, it was a big spike today. I missed it by 24 hours. But there, 135. And again, this is like that 160 in the pound yen. So kind of the same thing we're looking at. But right now, look for a bit of a reversal. There is obviously a piece right here too. And again, if we're going to see a bit of a movement, let's see. Does it coincide with a 50? It may actually. Ooh, it does. Look at that. The 50 slices right through. So I'd say, this looks similar to some, again, I'm going to say it right now. It's the same trade that I've drawn on other pairs with the yen. It does have area to pull back to, right? This one has an area to pull back to, right? This one, not so much, but there's this push here. This one, an area to pull back to. Of all of them, this one happens to coincide with a 50% retracement as well. So maybe one that if you're looking at one of those trade entries, this one may have a little bit more room to stand on, right? May have a little bit more room to stand on. View full screen. I don't know why it's doing that. No. I hate it. Whenever the sound card updates, it definitely messes this stuff up. All right, so yeah, here's a short there. Already talked about cryptos, and again, it's funny you're seeing Bitcoin. Banking system's ending, right? Oh, we have to send our money to Bitcoin. It's not doing anything, right? Ethereum getting worse, and TLT didn't quite make it up and it's reversing back again. So let's check out the dollar real quick. Yeah, dollar. The dollar, the profit taking is trying to come in, right? It's like, oh my God, after that move, got to get in. So crude, again, with everything going in the market, not surprised that it's coming lower. We can kind of draw some new areas. Again, 1, 2, 3, it based in there. Look at that. Broke the zone, came back up and grabbed the zone in the overnight. So again, a little Harry Potter trade in there, right? And again, that's what we like, right? Let's pull this all the way down. Not concerned about that one. I just heard Kip. He's supposed to be downstairs, though. Let's see what we got. Got anything back over here? It's been so long. this right now. I'm on a 4, by the way, if this looks kind of weird. 66, 76. Trying to figure out, like, how low can this go? Yeah, I'd say right now. So the risk in this one obviously is, oh my god, the market's gonna collapse. We gotta, we're going into deep, everything, everything's breaking loose right now. I'd like to find a bottom. I think this rallies tomorrow. Again, 3.8 and 4.0 are quite a push. Again, 4 is common for this. It's not common for crude oil. It's funny. Remember we were talking, was it Monday, Tuesday? Biden's like, we're blocking 13 million acres. You can't do it because global initiative, right? And what is oil doing? The price is going down, right? We're going to lower supply, guys. Hey, lower supply. You can't drill anymore. Right to the downside. 66, 61. I think look for a bounce in there. I think it probably can go a little bit more today, but I do want to see a reversal back again. Natural gas back down to that 247. We talked about being able to come all the way back down again. By the way, we talked about 270 yesterday. 4 o'clock this morning. It made it up to 259. So 260. We missed it by 10 cents. Right, we missed it by 10 cents. It's a shame because that was a really nice pullback. Actually, that was yesterday. So that was really the peak. We never got the pullback again. And you can see a little Harry Potter-ish trade in here. There's your base. Drop, pullback, and continuation. So right now we're looking for price to come down. Profit target is sitting down here at 242. Again, could that be a potential area for a bounce? It could be. Right, there's definitely some buying in there, down to 238. I'll put this. We'll put it there. All right, so 241.5. Right, 241.5. So it's all right. Gold, already talked about it. Right, gold is that upper level right now, looking to retrace. Right now, it's a flight to safety. People trying to preserve their, preserve what they got. And again, should you have gotten stopped out of here? No. I mean, base, hit. You're like, nope, this one's done. And once it started the base here, you're like, yeah, nope, not interested. Did get a little bit of a pullback. And again, funny enough, right, this one is actually one of the only 23 sixes that mattered, right? And again, right at 530. Okay, so there's one at least for them. Now, obviously, it's gone higher, so now I'd be very cautious with it. Like this one for the reversal. Again, seeing the dollar up, seeing gold up, seeing bonds up all at the same time. It's kind of like, whoa, alert. So I think gold probably rolls back down. I would say, listen, right now we're about to have that red confirmation. It probably rolls back again as people are realizing that, okay, the world's not ending right now. But again, headlines can really kind of mess with this one. So, I mean, I keep clicking this thing. Home builders is the last thing. I'm actually not going to be surprised if we do get a Fed comment. Somebody mentioned it something. Because again, kind of big news, particularly because this First Republic. If we hear any more about it, we will. It's just a matter. It's not a matter of if; it's a matter of when. So I'd look for, again, I think bearish gold, but again, use some caution in this one. Silver looks exactly the same. We missed 22.20 by a little bit. Look at that. Came up. It did spike up at 8:30 and then immediately just collapsed from that level. So you can see we're back under 22. So we can adjust this. I actually don't mind the top of that. We'll use that one for later on. And again, when this one fully deteriorates, a little racetrack trade sitting right there. 1 to 3. Oh, look at that. Right. Look at that. 1 to 3 just happens to be on the 21. So that's not the worst place. There we go. Come on, we're so close. Look at that. Not too bad, right? I think it comes back down. And again, it's the same contagion. I would say right now there may be some buyers sitting here that may push it back up into that 22 range. But 22 is going to be the ceiling for a little while. All right. So indices. Obviously, with everything going on this morning, your question opening print. Here was our top from yesterday, right at that 10:30 time. You guys remember? I said, hey, listen, all of them at reversal times. Here's your 11 o'clock candle. 10:30, 11 o'clock was your green. So had you attended yesterday, was it this one? No, how do I go back to, icons. Was there a better clock? A better clock would be cool. I don't know. I can just use this clock. Where'd my clock go? Am I not seeing it? All right. So obviously I'm on, there it is. It's like, where the heck is my clock? There was your 10:30 yesterday. And what do we say? Hey, listen, too much up in one day, look for a reversal. Bam. Now it's kind of the opposite, right? Obviously the profit ticket 1, 2, 3, 4. You weren't interested. It is basing around here, trying to find a new bottom. Wouldn't be surprised if this again. Not that this was a great entry. This is not the best entry, but I would not be surprised. If there's no news, we should kind of take up a little bit today. So as far as opening print goes, nothing. There's no confirmed anything here. There's no way to trade it. Again, the overnight position was this 3 o'clock. They took it early. They took this one early, so there's nothing you can do. But again, yesterday, great reversal on that one. NQ, right? There's your 10:30 reversal. Take the same clock, and there's your 10:30 candle, and there's the same zone, and there's the nice push back down again. And if you didn't get out, how about all that? There's where we started for the morning. Okay. Is there an opening print in this one? 8:39. No, we're sitting right in the middle. No confirmation either direction. But we know we kind of have a top and bottom. We're sitting in the middle. Same thing. I'd expect this one to rally up. I'd like to see what it does up here. But yeah, there's your short from yesterday. YM. Okay. YM. Same thing. There's your 10:30, the first green. And what did it do? Turn and roll back down again. To trade this one, again, it would have been there. And what did it do? It bounced off the bottom confirmation side. So again, there's your technical trading. And again, I guess see this is why 10:30 is like such a great time. There's 1 to 3. And what did it do? Came back down, found the tested from the overnight at 8:30, and right back up again, and then roll back down. So this one as well, we had a level markdown here, and that's what it's basing off of. I would say right now, Dow I think is going to have the biggest problems today. Just again, that manufacturing number is absolutely monstrous, and that's obviously associated with the Dow Jones Industrial Average. So be cautious with this one. ES and NQ, I'd like to see a little reversal. This one I'm not so sure about. And then Russell. Remember we said 1800 was a really important level. There's your 10:30 candle. The 10:30 is the red. So what did it do? It ticked just a little bit higher. And what did it do? Whoop. And guess what? If you didn't get out of that trade, guess what? Boop. There you go. 3 o'clock, straight down. You're absolutely without a doubt. And what have you done? You've run all the way back down to here. And it's struggling. It's looking, right? And again, 8:30, yeah, no opening print, obviously, because of the big monstrous move in the European session. But if you were here yesterday, this is, again, psychological levels. You got to understand what they are. And when we hit the 160, we hit the 135, we hit the 1800. They're all over the place. So, yeah. So that's what it is today. Again, today would obviously not be really an opening print. You'd be looking for reversals. And again, this one, look, it's trying. It's fighting, and getting higher. And with a parabolic move, this is really a parabolic retracement trade. So there you go. Fun day in the markets. All right. So with that, let's go ahead and do our drawing for today. Somebody knows he's a number 3 for today, right? Ernest is going in with 2, right? Right. So we're not quite. Somebody is obviously with as many tickets as they can. Why? Because he's going for 250 pip chips today. So now it's kind of like the few versus the many, right? We'll see how statistics roll. So I'll give you guys about 30 seconds more. I think we got pretty much everybody in today. Who are we missing? I need to check on Sean. I haven't seen Sean for a while. Right. There you go. Ernest is like, I'm gonna put it against him. So technically right now, Ernest went in big, right? So technically right now, he has less than a 50% chance of winning. Let's see who takes it. Winner of today's drawing is Neuro. He still got it. Wow. 43%. He got it. Man, Ernest, if you would have had 8 tickets instead of 7, I feel like you would have won. Right? You needed that one more ticket. Right? He got it with 43. It was there. Ernest, we needed one more ticket. What we really needed today was we needed Eki, we needed Mitch, we need one of the ruiners, right? All right, I'm gonna mark it as complete. We know who the next winner would have been. It would have definitely been Ernest. He needed 8 tickets to win, So let's give Neuro Ooh, Debbie. He's right there, Debbie. Give him his 250, and obviously it resets for tomorrow. Ooh, look at that. Getting close. Getting close. So, all right. So, in the next 24 hours, yeah, I mean, here's the crude numbers. Crude climbed 1.6 million barrels last week. Not really enough. Obviously it's Wednesday, right? What was the forecast? Yeah, 1.3 to 1.6. Nothing. And I didn't expect it to be a big number today. That's why I didn't cover it. The bank thing is just way much more than what we saw with oil. So it's just not as important. So anyway, I think the Aussie tonight, I think great trading opportunity at 8:30, particularly with the way that things are swinging right now. And then obviously tomorrow morning, the unemployment for the U.S. is good. And this main financing rate, again, if the consensus is it's only going to be a 0.35, maybe. How much will the market adjust in the next 24 hours is really the big question. And if the market adjusts to 0.35 and it comes in at 0.25, what does the euro dollar do? Does it get smoked? Does the euro yen get worse? And what does the euro pound do? It is retracing now. Is it loading the weapon for tomorrow morning for a short to see the euro pound take a big collapse? All high probability. So again, check these things out. Watch your headlines. And again, check in tonight for the Australian data. That'll also be setting up the euro. So with that, I'm out of here. I'll catch you guys tomorrow morning, 9:30 Eastern Standard Time. You guys have a great one. Thanks for joining me today, and I'll see you tomorrow. Take care.